love the chase and the hunt, and I set the pace when I'm running. I always take what I want and I always give it 100. Don't need a bank, no I'm funded. Play the game like it's nothing. I'm always thankful for something. Don't take for granted, stay humble. Now wake up! It's time to look at the enemy. Look in the mirror if he is no friend to me. It's not working out, maybe it's the chemistry. It's time to break up so I can make a better me. Better believe in your mind, cause it's everything. You can mold, shape, find almost anything. All it takes is some time and some clarity to find your identity. It's mind over everything. I'm immortal. When I feel like this, I'm immortal. When I feel like this, I'm immortal. When I feel like this, I'm immortal. Don't be scared. Just give me up. Back. I won't stop, I'ma fight until there's nothing left. It's so what? You're gonna be hurting bad, cause I've been to hell and back. You don't wanna make me mad, I stay strong. You will never see me crack. And if you get in my way, you're gonna feel the wrath. Gotta say it to my face while he's looking back. Mirror breaks after math, when I hate, I attack. When I feel like this, I'm immortal. I'm immortal. When I feel like this, I'm immortal. When I feel like this, I'm immortal. When I feel like this, I'm immortal. Don't be scared. Just give me up. Don't be scared.
Hello everybody, I'm sorry you guys had to endure the entire intro this time around. I'm just all over the place. I have another session right after this. Meetings, you guys know we just had a members meeting which was great in my opinion. I hope you enjoyed it as much as I have. I hope you gained some new knowledge, those who were not aware of things and now can use it to your advantage in, you know, in the market analysis and sort of according behavior. Let's get into the swing of things because we don't have a lot of time. We basically have barely half an hour, 32 minutes, 30 minutes at most, because I have to have a minute or two before I run away. 1 minute we're kind of really gonna gloss over and really skip really quickly because it's meaningless, even if right now it's at the bottom of the channel, which actually is turning around. Since it's so quick, it's not gonna be all that surprising if the market will still kind of pick up back up on that very channel. So kind of meaningless. We're looking at maybe 56.11 if it really does well, although right now objectively it's more negative. So I mean, there's nothing to hide there. 5 minutes is more negative, so it's not gonna be all that surprising if it actually make that downwards pressure that we just said, sort of breaking out of this channel, maybe building up a new one. The gap that we've generated in the morning is closed, just as I predicted in the early morning video, and I said it's far more likely to close throughout the day today rather than to stay open, although the market had a very, very bad, very weak open, struggled really badly with it, and still the community members here know we spoke in the afternoon. We said it's probably still gonna happen, even though very, very slow. The market re-accelerated, closed the gap. Not a big surprise. Again, literally what I was saying earlier in the morning. But now let's try and further out get to the larger time frames where things really matter. And You'll see why I've made this adjustment sort of right now, and those who see it's not all that surprising. The market, is doing what it's doing. We knew, right? We, again, not exact moment. I'm not readjusting. In fact, I mean, I can readjust, but it doesn't matter. You get the idea. It's not meant to be scalpel accurate, just to sort of convey the idea, and you can just follow up the previous videos and see exactly what I mean, because I kind of showed off these things in previous videos and explained exactly how it will work out. So this is for those who don't really know what it is and what I'm showing basically. It'll be really nice if my tools will work today. I don't know why, but TradingView is probably going bananas. I think maybe some overload on the servers. People are using them to try and chart and plot and understand what's going on. So objectively on the 45 minutes, a little bit more bullish. We are starting to see an overturn of the momentum, basically a weakening of the momentum. So it's not going to be all that surprising if the price action will actually start breaking down sooner than later, right? And right now it is still climbing, but again, the real question is, can we make it to 56.50, right? Kind of that's the range we can find, because that's where the support and resistance was last time, and the latest strongest area. Considering the push that we're having, I'm considering that will be the level that the market is pushing towards. And those who want to ask again about the the higher levels that we have left some gaps behind, I doubt we have the necessary momentum for. We'll see that in a second. Now, so if we're looking at the 4 hours, we see that we are far more bearish, right? And dying out, completely running out of momentum. And it's not, we're having some relief rally. It's something that we spoke and mentioned about, that you see, for example, in between time frames. But you have to consider that although you're having a relief rally, basically the bullish momentum overtaking temporarily, so it's doing so within the framework of oversold conditions, meaning the overarching bigger force that is affecting the price action is the bearish element, that we are in oversold conditions and not just that we are correcting temporarily. So because if we're going to see this, that this falls within the context of the larger time frame, guess what? The daily is tremendously bearish. I would say even accelerated temporarily, so that the divergence opened up. Now, as we're getting closer to the 50, it's not unheard of and very normal if we're going to see some retest here. It's kind of the normal behavior of the market. It doesn't have to exactly and precisely happen on the 50, but normally it starts, normally that's where it starts. It still signifies, for example, like in this instance, right, that we either maybe going to stay flat, retest certain levels, basically like in this instance, or for example, we can actually be going lower. How do we know which one is correct? That's why we look at the bigger picture. This is why we look at the weekly. And again, we're having that sort of same phenomena. I was trying to think exactly where it was. On the weekly, I didn't want to jump ahead of myself and make a mistake. But yeah, as you can see on the weekly, we're getting a very similar phenomena, right? We're getting a phenomena of in oversold conditions, but reaccelerating. But notice all that acceleration, right? Well, supposed acceleration that we're seeing, we know exactly where it's coming from. It is coming from that little bit of a correction or slowing down of the downwards pressure. So imagine if we have some corrective movement, right? Corrective volume coming in, we're still working within the framework, and this is why it's so important to identify the supports and resistances within which framework the market is currently working, and we want to try and understand whether we are done and over with retesting the previous bottom channel, and now our current support and resistance will end up being that 56.52. I would argue, based upon what we're seeing, it's far more likely than pushing back up all the way to the 58.20, which, with all honesty, I'm not against. In fact, all for, because we have a gap there, and if we'll close it, I'll feel a lot more confident, and that's kind of the normal procedure, and when we go up, and vice versa when we go down. But objectively speaking, if we look at the monthly is in fact accelerating, becoming a lot worse, and because it's becoming a lot worse, and we're pretty much just 35 minutes away from closing this month, it, as you can imagine, will not correct itself. There is always the likelihood of right now some Santa Claus coming from the sky and sprinkling some magical fairy dust, but the likelihood of that is, I mean, do I really have to say? So in other words, we're pretty much set and done with this candlestick. In fact, I would argue that it can get worse within these last 25 minutes. And we switch to the quarterly, and we realize another very important thing. Our quarterly is also getting locked in. That's it. This is the sort of final moment of the quarter. And we realize on the quarter, really what happened, we were not able to break above the 18. In fact, something I was warning about, how we are deteriorating in quite a clear fashion. Pardon my inability to draw straight lines. And if you objectively look at this, we're having the same sort of behavior that we saw on the weekly right here on the bottom, but in a far more important spot, and far more detrimental spot, I would argue. What this means is that if we become bearish dominant, we start pulling downwards, close the 50, on the quarterly, guess what? This in fact signals to you that from here on out, all that negative momentum within the framework of bullishness happened. So imagine how much worse will it get on the very next quarter, right? If we're going to be bearish dominant. Now, why would we think we're going to be bearish dominant? Because we already are. We already are, and this is just the beginning of the turnaround. So at least we have to observe and see how things will play out, whether we're going to have some more convergence or divergence, or simply see how it plays out into the bigger trend. And something I warned about all along, and I said, guys, this will be a very big problematic issue. And the main sort of signal towards the larger time frames that we can have right now on the market being very problematic and very bad or ripe for another big wave downwards is the half year. The half year is starting to break right here, the 50 range, retaining us in oversold or short conditions, bad basically for the buyers, if you will, more bearish. And we're having clear convergence of the forces once these complete, which we give us the sort of what we have to see for this to make that happen is the very next quarter. We're about to finalize the current quarter. Current quarter is signaling that the next quarter is not going to look any better, in fact, potentially even worse. So guess how this, by the time the quarter is done, the half year will look like. It will probably overturn. In fact, we'll probably see readjustment shortly once the quarterly today will get closed, and the following sessions, as it gets worse or better, we'll be seeing slightly adjustment, and further out we go, closer to a week, a month difference from here on out. Basically, once the month is over, once the month of April is over, we're going to potentially see some readjustment on the half year, and it will be even more signaling potentially that the correction is here and happening, which sort of confirms that what we saw in the smaller time frames is just a small partition of this turnaround, right? How a gigantic ship, a tanker is sort of turning around, but once it's done, it's going to become so evident that the market will just panic in one go, and the market will start dropping also quickly that nobody will be even focused on the analysis. It will be pretty obvious you want to be selling because the market is just dropping like a rock off of a cliff, right? But that will happen as we see closer to a couple of months from now. We're going to see more clear evidence, and basically in a quarter from now, we're going to be seeing or feeling full force whatever it is that in store. Right now, if we're looking objectively at this, it's very negative. All right, it is phenomenal that I was able to plow through this in some record time, I think, and actually explain so much. And now let's go a little bit deeper, right? Because I mean, we just kind of plow through this thing, so I want to go a little bit deeper on the explanation and sort of breakdown of what we're seeing throughout the time frames. Look, we've seen this very phenomena happen on the back end of things, on the front end of things. Sorry, this is the back end of things. On the front end of things, when the market moves upwards, when we have an upwards trend, we oftentimes have corrective movements. And you guys know that even during these periods, I was not biased in saying, yeah, I mean, it's a corrective movement. We're still in an uptrend. It's going to take a while until we finish. So what we're currently experiencing is not any different than we have on the front end. We have this on the back end. Our trend right now is distinctively, clearly a downtrend. But within the framework of that, we have some corrections. That is very normal. In fact, you can see the channel and you can see how the market obeys it so far. I would argue almost perfectly. And so, yeah, one of the reasons why we still say that 58, 20, 30, 40, whatever that is, to close the gap is possible, simply because that's the edge of the channel from before. Even though it will require some slippage out of this, the same way we have slippage on this end, we can have slippage on this end. And slippage can be quite a mean thing, because if we're sitting right here at 57.65, it's not all that far-fetched for the market to get completely irrational and, get carried away with the momentum and carry it all the way to 58, 50, 40, whatever requires to close the gap. But at that stage, the market will run out of momentum and it will be like a stranded plane up in the sky with no fuel. Guess what happens now? Gravity takes over. And the further out you got, the higher you got, the more painful that's the distance going to be between you and the ground. So guess what? It's not going to be fun. The higher you got, the worse it is for you. Stonky, thank you very much. You're a goddamn legend. Absolutely every single one of you, smash that goddamn like. It is goddamn free. What is stopping you? In fact, you don't like my face, press dislike. I don't care. Press one of them. Just do something. Jesus. Not the Christ kind, the Gouda and the other kind. Mozzarella. Bonko, the burr. Bongo go burr. Yep. Jake and Bonko print lots of moolah. Yes, please. Yes, please, Tonko or Bonko. Stonks, you just really went bananas there. Jesus. I shall review any stocks request from audience if you want him to review. Please request with a following format. Yes, please, absolutely do that. But really quick, two stocks. Two first members. Come on, two stocks. Whoever want to see two stocks only. Here, Jay. Okay, we got one. Okay, another one. Bonko is not the stock, so two stocks only. Come on, guys. Another one. Just one. Tesla. Okay. ERJ and Tesla. Let's start with Tesla because I already have Tesla on the screen. And I really would like to do Tesla, so good one. BRK. Lucas, I'm sorry. That's it. Today you're sitting in the corner. We'll see. Okay, so let's do Tesla. Tesla is actually, I really want to do Tesla because I didn't really look at them properly today. I'm not gonna lie. Today I kind of skimmed them. So you see, everybody's gonna start being, looking for my soft spot now. You see, this is not what I can't. You see, that's the problem. I'm sorry, guys. Today I just have many sessions and lots of stuff, and we had a great call with the members, but I had to really condense everything. So I'll get to do everything for everyone, and so everybody will be up to speed. Jesus, even my chart looks like garbage. What is that? That's the main. Let's go YouTube. Okay, let's go YouTube. Let's see if I can see more of a normal chart right here. Let's because I can understand this, but I'm like trying to imagine how it is to try and get anything I'm saying from that chart for somebody who's not here consistently. Is going to be just painful. First of all, we closed a whole bunch of gaps. Remember that? I told you. People are like, no, these gaps, no one cares. Who cares about gaps? Well, check this out. We closed 100% so far. No, like 99.9% of all these gaps. Cool. Now, where are we at? Let's see momentum. Momentum on the hourly is upwards. We are in an upwards channel. That actually makes some sense. I kind of spoke about how to have a relief rally. This really broke down a lot quicker than what I've expected. You definitely closed your gaps right now, so you're definitely more than ready to break. That's not good news for you. But then again, you still have bullish momentum, which I would argue definitely hints at that beautiful golden pocket that is located right here. A super important strong level, if you know how to derive it, really. And more so, it falls in line with the junction of the channels. If you see, it just perfectly falls on where the downwards channel, the upwards channel, everything is combined to this one tiny area. So my argument, you're going here. X mark the spot. then you're probably going to be going down because it still looks like utter shit for Tesla, just like it looks like shit for the rest of the market. But hey, you're going to have a fun day tomorrow, potentially-ish, and moving towards convergence right here on a quarterly, of course. So once it converges and becomes even more bearish, maybe potentially some waking up there, but it will give you nothing better than 300 on a really good day. But if the market is deteriorating while this is happening, it's probably not going to happen. You're probably going to get stuck in the golden pocket right there around 273 and 260. Okay, that's roughly where it's going to be at. And we said ERJ. Since we are here, let's just do it here because I think it's going to be probably the most digestible form. Let's see what we get. ERJ. ERJ is interesting. Why is it so flat? Why is it such a very obvious flat channel? So this is not too good. It's running hot on your monthly. This is very, very not good, and for quite a long time. And I would argue that it has 1, 2, 3 major impulses, and the third one, well, the fourth one is already slipping over. So it's kind of the part of the same one, I would argue. So very indicative of this trifecta, as we're familiar with. And so it's very indicative that you're dying out on the monthly, and your quarterly looks like utter crap, and in fact already bearish dominant, or what is that that's going on here? No, it's bullish dominant still, but it's definitely dying down and running to an absolute overheated state, if you ask me. 6 months, oh yay. I mean, it might take longer than you expect, so meaning, although this is, I mean, it might take longer, but I wouldn't bet on it. And if it's market related, it's probably going to react with everything. It's still, I mean, your yearly here shows that you have a little bit more bullish momentum in the system, which is pretty interesting. That is actually pretty interesting. So we have to find out the accuracy, as accurately as possible, correlation with the market and how this behaves within the dynamics of the market. And this looks very detached to some extent. While it's weird. It's really weird. I would probably, if you want to go deeper, talk about this, on the Discord. But for now, not to leave you hanging, it is like the rest. It is looking like it's running hot for a very long time, and even if it will go for another sort of impulse on the back end of things, it just means you're going to make a double top bull trap. It's like this. It's as if I was prepared for this in advance. And break down. So that is not good for you. Even that other scenario, even though you may squeeze a little bit more, but it's going to be a lot of volatility, a lot of moving back and forth just to end up squeezing what. That's going to be fighting for these 10% that we say don't do that. It is the worst thing you can do. You're risking a lot for very little. But again, depends on how you structure your position. If it's options, bananas, there are ways we know to do this in a more safer manner, but what we are arguably seeing right now is the entanglement of the price action with what this ceiling is. So I'm not going to be all that surprised if it's not going to be all that rapid like this and done. No, it's probably going to be something akin to this and retest until you get annoyed and you don't want to see this price level anymore, within which you can actually go a little higher and generate that double top bull trap, and then see a breakdown of the price action. How low? Probably to the bottom of it, which is not this. It's not the lowest point you can find. No, I know it's very tempting to look at the market this way, but no, in this instance, it's kind of that, I would argue, which is 950. Looks like a 950, maybe. It's like I would argue. I would have to probably look closer. What is that? Let's see if we can find whatever that is. It appears to be roughly around the 950. I mean, I maybe am off by like a cent. You know what I mean? But yeah, you can see this. It's like a 950. Don't ever try this at home, boys and girls. I just eyeballed this support or resistance. Don't do this at home. There is a mathematical accurate way to derive it, done via using proper technical analysis tools, things you learned in primary school. Just learn how to apply it and it will reveal a lot. Right now, I don't have any spots in my one-on-one academy. I will have some soon. For now, I highly recommend you join the community, join the hangouts, and all that beautiful stuff. Today's hangout, of course, was sort of how to explain it. I mean, something new that I was working on and planning to do, and it's something that we're about to do pretty much on a consistent basis. But today we were forced to deal with what the market gave us. Normally we're going to be tackling a little bit more stuff that I feel like the students or the members need in order to deal with the day-to-day markets. Definitely join that, because we're pretty much at the beginning stages, so that way you will not miss out on anything. And you'll be up to speed, and you'll then be able to be independent and analyze the market on your own. BYD open plan US, then Tesla can file bankruptcy. Next level, no, you are... Wow, that is like such a stretch. I mean, I'm just saying. First of all, if BYD gets to the US, we don't know how successful they will truly be. Tesla will always be Tesla, and Tesla is not a car company. BYD want to have their self-driving, their FSD, first of all. BYD wants to have their level of technology, manufacturing technology, and BYD cannot even dream or even plan to have their energy storage business, their robotics business, their AI business, their solar business, which right now is exactly in the shitter, but it is still there, and plenty of other beautiful things Tesla will do. I know it's very easy to hate on Tesla and Elon right now. That is bullshit. I mean, sure, they will maybe take an olive out of Tesla's pizza lunch, if you will. Hi, Tiny Bug. Hello. But it's very, very, very unlikely. They maybe will take an olive, but the pizza will still stay Tesla's. I mean, Rivian definitely gets a slice. I'm sure some new companies will get a bit of a slice, some of the older OEM manufacturers. But they will, the ICE, what the fuck did I say, the ICE manufacturers, and but it's Tesla. It's Tesla's world, and everybody else paying rent. I think that's Dan Ives's quote. So the reality is still as such. Of course, no one says things cannot change, but I highly doubt that in the long run, Tesla will lose its place. Tesla is a phenomenal company. Elon has crazy shenanigans and a crazy moron sometimes, but at the same time, he understands and he has a vision. If you ask my opinion, as far as I can tell, observing and listening to what he says, of a highly technological future that will become a staple. And right now we're seeing the birth pains. It's going to be difficult as all hell. It's worse than trying to, replace a dirty diaper on a baby while he's kicking and fighting. It's actually worse than that process. I used to describe it as that. It is far worse. But if Elon is successful, Tesla is a name that will stay, and our kids and grandkids and grandkids will get to see and live, by using products of. While BYD, I'm not exactly sure if they can even bring themselves up to build a plant in the US for various all sorts of interesting factors. Bottom line is, I'm not saying BYD have no room in this industry. It's just that I wouldn't compare them to Tesla by any means. Okay? That's just to be objective about this. Trump will bring peace to the world. Best deal ever. Defense stocks will go zero. That is not true. Defense stocks will then prepare for an alien invasion or for shit go sideways anyways. Why? Because people are crazy or unstable. Even if we have peace today, it doesn't promise that we're going to have peace tomorrow. You always want to be armed and prepared for somebody to go bananas. And in order for people to have the reason to not step out of line and start collecting and piling up arms, you yourself need to have arms. So you see, it's not exactly that. In fact, the more advanced the technology will get, the basically defense is not going anywhere. I mean, forget about it. Just saying. And I mean, if you envision world peace tomorrow, then bro, I'm sorry. I really gotta disappoint you. I mean, I don't like I'm against it. It's just that I highly doubt that we're gonna see this. I mean, people, 100 years ago were planning to live in a utopia. Somehow, just yeah, so far didn't happen. We're trying hard though. I mean, we're making great strides into the future, but not yet. Folks, thanks for attending today. Have a great week and see you soon again. Stonks, thank you very much. Leave a like before leaving. Absolutely. Definitely, boys and girls, smash the like, ring the bell. Make sure you transfer the notification thing to everything. Otherwise, you'll not be up to speed when I go live. And then you'll have to complain that you didn't know that the market is doing this or that. Well, I was preaching and telling that is probably what's going to be the case for weeks before it ever happens. So, with that in mind, boys and girls, I'm going to drop off. I highly recommend you join the community and ask me about the One-on-One Academy. It's currently full, but within no time I'll have more room. And you definitely want to book a spot. That way you wouldn't have to fight others and struggle for a time spot. That's it, boys and girls. This is it for today. Let's get ready for the upcoming sessions and how painful or pleasant they will be. In my humble opinion, the market is really getting ready to go bananas. So bananas, when I say, I mean go mad. Volatile, that means it doesn't mean up or down, it just means volatile. But the overall result will still end up being on the lower end of things and not a V-shaped recovery, how some people for some reason are imagining is possible under these economic conditions. Because Tom Lee said so. Okay? That's cool for him. Yeah, I mean, Tom Lee does need, suckers to be buying his stocks when he's selling. Don't forget about that. Boys and girls, see you in the next one. See you tomorrow. See you in the community. Bye for now.